me great pleasure now to bring on board Mr. Anish Shah, Managing Director and CEO of Mahindra & Mahindra, to walk us through the contours, this big exciting deal which Mahindra & Mahindra has just announced, and what is the way forward for the entire electric portfolio of Mahindra & Mahindra. Mr. Shah, fantastic to have you back on ET Now. Thank you for joining us. This is a fantastic deal for Mahindra & Mahindra and the shareholders of Mahindra & Mahindra. The stock in the morning when I checked was at an all-time high. This clearly demonstrates the engineering capability of Mahindra & Mahindra. Walk us through that. Why do you need a foreign partner? Is it just an endorsement, or this deal has been done with the whole idea of getting capital in the company?
So Nikunj, first, it's a pleasure being here, and this is a very exciting deal for us. It's really in many ways an endorsement of our path to EV leadership. We have a very exciting range of products that we will be revealing on August 15th. And as we were in discussions with BII on a number of things, we felt that this was a partner that was committed to climate change in the long term, which is something that we are very passionate about, and a partner that could really help us on multiple fronts as we go forward, which was really the reason for the deal. It also helps have someone who is a very reputed global investor come in and endorse that we are on a path to EV leadership. They've obviously done a tremendous amount of diligence, looked at our plans, our products, what we're going to put out there for consumers, and have concluded that yes, we have a winning strategy, and that is the genesis of this, and that really drives the ability for us together to agree on a valuation of $9.1 billion, because this is really what will drive our success going forward.
It's a great deal, and the deal in terms of the gravitas, the valuation, and also what this proves about Mahindra & Mahindra engineering capability, I think is excellent. But my follow-up question, Mr. Shah, is that do you require the cash, or this deal in a sense has just been done to establish valuation for your EV portfolio?
We had laid out a cash plan already, and our cash generation is very strong right now. So the deal was essentially done to establish valuation and to have the benefit of a long-term partner like BII, where climate change is an important part. So I do want to highlight that this is really bringing our ESG commitments to life. And those were the reasons why we did this deal.
Since the deal comes with riders, which is there is a lower yardstick and there is an upper yardstick and there are riders attached, what are these riders and how will essentially the entire relationship move?
So EV today is an area that will develop, and penetration in EV is something that no one today can say with confidence. So the range essentially is dependent on EV penetration of our portfolio, and therefore at 30% EV penetration we see the upper end, which is $9.1 billion. At 20% it's a lower end, and that's really the range. The riders are not very meaningful in that sense. The basic set of conditions that we're working through for the second tranche of investment is that we will bring in other investors as well, which is something we are on board with. As we go through this first round, as we show that we can develop and deliver very strong EV products, we will look at higher valuations as we go forward and bring in other investors. As a development institution, that's something important from BII's standpoint, to be able to show that this space is developing very well. And that's really all we have in terms of riders. There is nothing else that is onerous.
So on a longer term basis, how much ownership would Mahindra & Mahindra like to maintain in this subsidiary? Is there a threshold below which, irrespective of new investors and irrespective of further dilution, you will not go below that?
So our objective is to maximize value for our shareholders, and it depends on what valuation others are willing to give in future. And based on that, we will assess what level we want to divest further. So our lens is essentially around value creation, and to the extent we can create more value, we don't have a specific benchmark in mind. It will just depend on the value we create for this business as we go forward.
Your EV portfolio and the company in a sense has indicated that you want the total portfolio of future Mahindra and Mahindra to have a EV number of anywhere between 20% to 30%. Given that you are a late starter and others have already taken giant steps, some of your peers, when do you think you will be able to achieve this mark?
So we have set out F27 as a target for that, and this also this deal endorses the fact that despite being a few steps behind, we have the ability with the new portfolio or the range of products that we're coming up with to establish or re-establish leadership in the EV space for us. As I've said before, we are in the first 5 to 10 overs of a test match in EV, and there's a long way to go. And the new product set that we have is a very exciting one, and one that will get us back to EV leadership. So as we look at F27, we are very confident that we can get to 20 to 30% penetration. It may actually be even higher depending on how we go, but at least for the contours of this deal, that is what we've set up.
I'm assuming that your EV portfolio will not be restricted to just SUVs. You will go beyond EVs. EVs in your. You will go beyond SUVs in the EV portfolio.
So as of now, we are focusing on our core strengths, which are the large and the compact SUVs. We are not going to get into the micro SUV segment or the sedans. That may change over time as we establish leadership in the SUV segment overall. But we are starting with our strengths, and also recognize the fact that the reason BII has come in is because they see the success of the launches we've had. We've had 5 blockbuster launches in the last 12 to 18 months. And we are number 1 in SUVs today in India from a value standpoint. So that success is also essential to be able to foresee the future and say that it's not just the powertrain which is electric, it's also about the car overall. And the models that we've got and the success we've seen with consumers is really the barometer of what we see success like in the future as well.
Now, your SUV portfolio has re-rated the stock, and it has really endorsed the engineering capability of Mahindra and Mahindra. My question is that a couple of days ago you had a successful Scorpio launch. XUV series has done rather well for Mahindra and Mahindra. Don't you think that you may actually end up cannibalizing your own SUV ICE success with EV launch?
We have to be brave enough to cannibalize our own success. That's really what will drive future success for us, because we have to deliver products that the consumer wants. So we will continue to deliver very strong products on the ICE front as we have done, and in many ways even stronger products on the EV front, and let the consumer choose where they want to go. Our sense is that there will be a greater transition towards EV, and that's the way the auto industry is going. But what we feel good about is the foundation is really the strong manufacturing and the product development skills that we have built for ICE, and those are skills that will translate into EV.
If one has to understand the EV trajectory versus the ICE engine trajectory, we pretty much know that what the margin in the ICE engine category are. But EV right now is at a nascent stage. It will grow and it will scale up, and the margin trajectory could be very different. Do you think that EV business in a long-term basis will be more higher margin and high growth business for Mahindra and Mahindra, and it will overtake ICE business or the traditional business at some point in time?
Our sense right now is that margins will be similar. And if you look back at petrol versus diesel, different powertrains, similar questions would have been raised when diesel started becoming more important at some point in time. But overall, it comes back to what is the vehicle. And while you have different powertrains, it's the vehicle that really matters. So over time, we would see margins really be very similar to what we have today.
6 months from now, will Anish Shah be using the new Scorpio or the new EV launch, the new EV avatar which would be launched?
I would say all of the above, including the XUV700.
Okay, and of course, of course. So just to wrap it up with just one final question, what is, how would you paint the big picture of the EV market for us? Because right now the initial start is quite encouraging. But do you think it is more than a sugar rush, considering that there are challenges in terms of getting the infrastructure right, there are challenges in terms of getting the entire framework right?
I think what's happening is a lot of consumers are also feeling that there is first an element of contribution to climate change. Second, EV cars are often more exciting cars because you've got a much better pickup, you've got more space in the cars, and that will lead towards EV taking over from ICE as we go forward. Infrastructure and other things will be hurdles, but for the short run. And which is why today we say 20 to 30% penetration by 2027. But as we go beyond 2027, we would see that penetration going up. And it's just a matter of addressing those issues.
I'm just tempted to ask you one final question, and this is purely coming out of the recent semiconductor issues which the industry has faced. What are the lessons to be learned? Because if the industry and if Mahindra and Mahindra is migrating towards EV, that means the supply chains have to be efficient, in time has to be better prepared. But COVID has taught all of us a nasty lesson that you should not be dependent on supply chains forever.
Absolutely right. The lessons we've learned from COVID are agility is critical. The ability to see around corners and start forecasting events or scenarios before they happen is important, and preparing for them or having plans. In some cases, putting down money for options that may be exercised if certain scenarios happen, and having relationships not only with the tier 1 suppliers but even sometimes with their suppliers to make sure that we have an early read on what's happening in the industry across the value chain and can react very quickly to it.
All right, that's the management of M&M talking about their EV foray, the plans on the cards as well. The stocks fizzled out, but lots going on in the markets. 16,163. We'll take a very short break, be right back as we come back and talk charts, stocks, and lots more.